Hey guys, this is Brett Swarts with Capital Gains Tax Solutions. You're listening to my good friend Kyle Stanley's podcast, The Fearless Investor. Keep listening to conquer the world of investing.
Welcome in, guys. We've got Brett Swarts with Capital Gains Tax Solutions on the call today. And what I'm really excited about is he's talking about, and you're going to hear him say it a lot, it's the Netflix of 1031s. I didn't think that 1031s were a thing of the past, but apparently they're becoming a thing of the past. And Brett talks about exactly what the Netflix version of that is today and how the 1031 is the blockbuster version, the old version of the way that people are able to really save those capital gains and not have to give them to Uncle Sam. And so I personally wish I would have connected with Brett like probably about 3 weeks ago, because I just did a deal where I had to pay a bunch of taxes and it was unbeknownst to me. I should have been doing it the way that Brett was talking about, but man, learning a lesson the hard way, timing's everything, right? And so this one really connected with me. And I hope today, if you own any property or if you're looking to own any property, Brett's going to share some really good tips and ideas about this new way of doing 1031s. It's not a 1031, it's completely different. You'll hear what he calls it. And you're going to learn that right here on the Fearless Investor podcast. So let's jump right into it right now with Brett Swarts. Hey guys, welcome into another episode of the Fearless Investor Podcast, and we have got Brett Swarts coming in from Capital Gains Tax. He is the Capital Gains Tax Solutions podcast host, and we are going to be talking about all things that are going to help you today in regards to buying and selling properties and being able to make sure that you are capitalizing on saving that money. So, Brett, thanks so much for being on the show today.
Kyle, thanks for having me on the show. Pleasure to be here.
All right. Awesome, man. So you yourself, are you in real estate investing? Do you have deals yourself?
Absolutely. Grew up in the business with my dad in the Bay Area, custom homes, rentals. It's in the blood since the very, very MC Hammer days. You know, those were the times when I was a young kid helping him build houses. And so also went into multifamily brokerage at Marcus and Millichap, and then helped raise funds for syndication deals, as well as still broker some deals as well. I'm with EXP Commercial, but the real focus is Capital Gains Tax Solutions. We're helping people get away from the 1031 forever and do more deals, whether it be on the buy side or on the sell side.
Okay, cool. So getting away from the 1031, why would someone want to get away from the 1031?
Well, let's talk about the demographics going on right now. It's, according to American Bankers Association, it's about 17 to $20 trillion that'll pass from one generation to the next in the next 20 years. And this is our parents, Kyle, and this is known as the largest wealth transfer in the history of the planet. In fact, there's about 10,000 baby boomers in the U.S. alone. And every day, 10,000 turning 65 every day. And there's about 77 million in the U.S. alone. And they're faced with this huge liability of tax from these highly appreciated assets. And most of them have been 1031 exchanging, right? That's been their mode and method of deferring tax on commercial real estate.
Right.
The recent tax plan, even before Biden, when he's proposing to take it away, years with Trump, they limited it just to investment real estate. And so you have high-end primary homes, investment real estate, highly appreciated public stock, and also exchange deals that are hard to find deals. So what's happening is it's tough to even use the 1031. The 1031 only works for investment real estate. So we want to provide a solution. What's called the deferred sales trust. We liken it to Blockbuster versus Netflix. Blockbuster is the old way of doing things, and there's a thing called Netflix, and it's a much easier way to do things and a better outcome for everybody.
That's great. So just so our audience understands, 1031 exchange, just break that down into what it is, why people have been using it.
It's a legal tax loophole to allow people to defer capital gains taxes on the sale of investment property. So essentially, you can say a $1 million deal and it gained 500,000. If you were to, get hit with the taxes, somewhere between 30 and 50%, depending on the depreciation recapture. So you don't want to pay that. Most people want to defer it. So you can take that equity, you can send it to a qualified intermediary. And if you follow rules and go buy another property within 180 days, guess what? You get to defer all that tax and keep it working for you. So it's a great way to use the time value of money to defer the tax, use that equity to buy more and build more wealth.
Yeah. And Robert Kiyosaki talks about it a lot. He did a lot of that himself, buying single family homes. They appreciate, pays down a lot of the equity, and then he would 1031 it into an apartment complex, and use that money to go buy something bigger. Now, what you're talking about is tax deferrals. So, what is the difference?
Yeah, so I'm talking about the deferred sales trust,
Okay.
which again is the Netflix to the Blockbuster. So we're still
Okay.
doing tax deferral, but we're giving you so much more. So do you remember going on a Friday night, Kyle, and you show up and that favorite movie you saw at the end of the aisle, that's the one you wanted. But as you're walking up to it, so does the other three people who also see you walking towards that. And that cardboard box, it starts to get smaller and smaller. And all of a sudden you get there and it's just a cardboard box. It's not actually a movie, right?
Right.
Well, that's like the 1031 exchange, right? We're seeing right now low inventory, hard to find any deals that make much of any sense. I'm here in
Mm,
California. Deals haven't made sense in probably 5 years,
right.
right? And depending where you're at, it's very challenging. Well, that's like Blockbuster. Everyone's going for that one movie. Prices are through the roof. Deals are not making sense on a cash flow basis. And so, why are they doing that? Well, part of that 1031, they have to close and identify.
Right.
First, identify in 45 days, close in 180. Very restrictive. Okay, puts a lot of pressure. And we call that the blockbuster way of doing things. This is the old way. The new way is the deferred sales trust. You have no timing restrictions, so you can sell high and buy low. And I'll give you a deal story. In 2006, a gentleman sold out of Minnesota a $20 million asset. Looked around. This is before the crash. Knew it was a highly appreciated market, and decided to use the Netflix, the deferred sales trust, put it in there, and he waited on the sidelines. And he was patient. He paid off all of his debt, and he swam in what's called a blue ocean. And he
Okay.
waited for market to shift. 5 years later, that same property he sold was foreclosed on, and he actually bought it back from the bank, all tax deferred, not using a 1031.
Wow.
And so we call it the Monday morning quarterback. And that's, we call it the Netflix, right? You might as well sit in your house and just click. You're never sold out. You don't have to drive in the snow. You don't have to, fight in the lines, right? You don't have to return it within 3 days. You have tons of options. So the first one is optimal timing, right? Our parents taught us to sell high and buy low, Kyle. They didn't teach us to sell high and buy higher 180 days later with more debt. And
Right.
often that's what the 1031 forces you to do.
Right. That's a really good point. So, I guess my question is, this money stays in the trust while we're waiting to look for the next deal. Is that basically what I'm understanding?
If you wanted to, you can put it in stocks, bonds, mutual funds. You can put it into hard money lending. We just did a deal out of
Wow.
Georgia for 7.6 million, and this in the middle of the COVID crisis. And he doesn't want to do a 1031, doesn't want to buy any property, but he put it into a hard money lending fund, paying about 6% simple interest, very low risk, really nice debt, but he's just being patient. And then 7 months go by, and what did he do? Well, he just bought a deal in Florida at a discount with some of the money, all tax deferred. Okay, the entire time not using a 1031. Oh, by the way, he's a baby boomer, and he's also tired of the toilets, trash, and liability, and he's ready to be retired, or at least semi-retired.
Hmm.
And so he's using a operator who is a trusted strategic alliance with capital gains tax solutions. Their name is Praxis Capital, a guy named Brian Burke. And Brian and his team have over 100 years of combined experience, 100,000 units of multifamily, and over $5 billion of assets under management. And so what they do is they find value add opportunistic deals outside of California. They're based in California. They learned the hard way not to touch anything there for a long time. So they bought a deal in Florida. They bought another deal in Arizona. And so now my client is diversified. He's with a nice group where he didn't put all the money in with him, just some of the money with him. And he's getting a cash flow off of that as well.
That's so good. I mean, when we're talking about this, I guess the first thing that's coming to mind is, why is this truly like Netflix where it's like brand new, or is this something that's been going on for a while that people just don't know about?
Yeah, that leads into my three secrets of the optimal timing transformational exit plan, right? It's really learning how to legally break free from the capital gains tax, find freedom to buy and sell your business or property without ever worrying about a 1031 ever again. So my story starts at Marcus and Millichap, and I was sitting there saying, too good to be true. How do how do I know this thing is legal? What's the track record? And this was 2009. See, this is right after the crash. So I had friends, family, clients who lost, some of them lost half, some lost everything. By the way, I was just a brand new broker. I was just barely making in the business, and my wife and daughter at home, and we're trying to survive. I don't know if you've ever been in a situation, Kyle, where you feel like you're not sure how you're going to be able to provide for your family. Well, that's where I was at. It
Wow.
wasn't always easy. And at the time, the market crashes, and I went from a broker making a little bit to making next to none. And so we had to get creative, and we had to try to solve problems. And so at the time, my manager at Marcus and Millichap brought in a gentleman who's now my business partner and the co-founder of the Deferred Sales Trust. And he talked about this deferred sales trust. And like most folks, we said, well, how long has it been around? At the time, it had been around for about 12 years. How many audits? A few audits. How many deals? Lots of deals. Okay, fast forward now, thousands of closes, billions under management. Last year alone, about 2 billion of actual gross volume of DST asset sales were sold. And so, yeah, it's been around for a long time. Here's a key: most people just don't know how to do it. They haven't done it. And like anything, it's always new or too good to be true until you have a guide who's a few steps ahead of you,
Right.
who's going to show you how to do it. Right. Same thing with like self-directed IRAs, right?
Yep.
Self-directed 401ks, or even the 1031 exchange 25 years ago. Now you have 5,000 companies of 1031s all talking about it all the time. Guess what? There's basically just one group who's talking about the deferred sales trust. That's the tax attorneys who are my business partners. Now there's some others who are our business partners, who are financial advisors who offer it for their particular one. For our role at Capital Gains Tax Solutions, we work directly with commercial real estate investors, brokers, syndicators, and we are the trustee to help close this. So it's still new until you meet someone who knows how to do it.
Yeah. Well, this all sounds so good. So my question is, when it comes to a 1031, you talked about one of the glaring issues with the 1031, which is you have to identify a property within a certain amount of time. That isn't here with the tax sales trust, or sorry, the deferred sales trust. Is there any downside to this?
Yeah, the biggest thing has to be with who is this third party unrelated trustee, which is me, which by the way, I'm kind of like a 401k company or an IRA company, and there's a custodian over the account to keep it from Kyle's actual hands for being taxable. So you've got to learn who we are, where the funds are invested, how it's protected, how they don't move without your signature, which we have all in place. We have billion-dollar banks. We hold it at the investments for the securities go to TD Ameritrade, Charles Schwab, which is now the largest brokerage in the world. So once you get past that, like, oh, this is just a tool, but I have all the rights and protections of a lender. You become the lender in this scenario. This is how this thing works. We're not doing, you
Mhm.
are literally carrying back for the trust. And therefore, we have the blue ocean to swim in, and we have that blue ocean of rules, which are very flexible, Netflix versus the 1031. So once you get past that, oh, I'm not the owner of this trust. I'm the creditor. I'm the bank.
Mhm.
Okay, that's a little different. Second, who's the trustee? That's our role at Capital Gains Tax Solutions. Do they have, what's their track record? Do the funds move without my, my signature? The answer is no. Once you get past that, it's pretty much smooth sailing. Here's the thing: real estate is like a religion, and I grew up in that religion in the Bay Area with my dad, building custom homes, owning rentals, doing 1031 exchanges, thinking that the only doctrine was the 1031,
Right.
right? And thought that that was the only way to believe how you build wealth in real estate. Well, guess what? There's another doctrine. It's called an installment sale. It's known as a seller carryback. That's our foundation of our structure. A deferred sales trust is just a form of an installment sale. And it's always been that doctrine. It's always been around. Most people just don't know about it or use it because why? It was worse than the Blockbuster, right? It was like the Hollywood video, right?
Yeah.
It was like, well, it gives me a little bit of stuff, but it's short in nature, and then I get paid tax anyways because they pay me back. So we just took the Hollywood video and we said, look, let's make it the Netflix. Let's give unlimited timing, meaning you can go for as long as you want. You can take these, you can pass it on to your kids. You can invest in multiple things. And when we did that nuance, and that's the beauty of this deferred sales trust, it's something that your CPA already knows about installment sale. It just, we apply it in a different nuanced way. That's why it's legal. It's faced the IRS multiple times and has passed every single time.
That's great. All right. Well, I love stories. So I want to hear a couple of stories of maybe some clients or maybe even some of your own personal experience of what you use this for and some big wins.
Yeah, absolutely. We talked about some deals that closed recently. So we just did a deal last week. It was about a 50-unit multifamily property in Colorado, and it was for an older couple who was tired of the toilets, trash, and liability. In fact, their net worth was very high, excess of $20 million, and all of it's inside of their taxable estate. So this is really big for the deferred sales trust. Not only did we solve their capital gains tax deferral challenges, not have to put them in another toilets, trash, and liability. Right? They've made their wealth, right? They're ready to
Mhm.
retire, spend time with their grandkids, travel, not deal with the headaches. So we solved that. But then we moved all 5 million outside the taxable estate, which saved them 40% on what's known as the death tax. Okay.
Wow.
For anyone who's married, 22 million or more, 12 million single, it's inside the taxable estate, is hit with a 40% tax. Well, those are set to go probably back in half in 2025. Anyway, so we solved that challenge. Guess what? That broker's really happy because he sold the deal, right? guess what? That buyer is actually happy because they actually sold the deal. There's a lot of people literally sitting there. And if you're a listener trying to buy deals for the first time, there are people that you want to buy from. Who do you want to buy from? The mom and pops who are tired, who are like these clients, who are ready for a change, who don't have a good solution. But when you can provide a solution to the problem, guess what? You're more likely to win that deal and maybe even get it at a discount, right? Because they don't
Wow.
have to pay all the tax. They can say,
Yeah.
oh, I can sell it for a fair value
Right.
because I can defer the tax, and you moved it outside my taxable estate. Guess what? You're a more attractive buyer versus everybody. They're calling up and saying, hey, I got this Blockbuster 1031 thing. Do you want to do it? And they're like, no, I've heard Blockbuster forever.
Right.
I heard Blockbuster. And then you say, no, I got this Netflix thing. Oh, okay. Tell me about the solution that you have for my problem. So as a buyer trying to attract sellers, you are in the job of not buying their property. You're in the job of solving their problem.
Mm.
And when you do that, guess what? You win the deal. So that's the key for them. We did another one let's see, in Palo Alto. It was a high-end primary home, $8.3 million sale for a
Okay.
gentleman who was the number one Keller Williams agent in the entire company,
Nice.
multiple years. And he used it for his own house. And he going, Brett, I've been in the business for 30 years, never seen this, seemed too good to be true. I took to a CPA. We went through with him. It's true. It works. He did it. And he just closed that one. So we can talk more and more about more deals, but I'll pause there, see if you have any questions.
So you said he did that on his primary home?
Yes.
Wow. Okay. And that's something that I don't think can be done on a 1031, right?
Correct. The 1031 only, it's like Blockbuster, right? It's very restrictive. It only
Yeah.
works for investment properties.
Right.
So we do primary homes with the deferred sales trust. By the way, we do businesses for the deferred sales trust. It works for cryptocurrency. It works for public stock.
Wow.
Okay. So if you're a syndicator looking for ways to raise funds, there's a whole blue ocean out there that you could move it to the deferred sales trust, and then the funds can be invested into your next deal, all tax deferred. It's an amazing way to, again, make it seamless to unlock that capital. So yeah, we've done car dealerships, LLCs, LPs, C Corps,
Wow.
S Corps, partnership separations. I did a deal in Sacramento we sold the property for $270,000 a unit. Crazy price for a flat roof, 2s and 3 bedrooms. Yeah, $1,400-$1,500 in rents, but bullseye location. But they had bought it for like $700,000 in the crash. So now it's worth like 1.9. So we sold it. Each partner went their separate ways. This is important. In a 1031, the whole entity must move. Blockbuster.
Yeah.
Well, what about Netflix? You can go your separate ways. Yeah. Into your own trust. Yeah. We can separate it. So super flexible.
So here's a question. If I'm listening to this right now and I'm just getting started in real estate or wanting to get started in real estate, this sounds like a pretty powerful tool that I want to understand. How do I understand how I can use it to add value to, like you said, a seller?
Go to experttaxsecrets.com. You sign up for my coaching program, and you literally have me help you guide you through education.
That's perfect.
Education. If you want a free version, you just go. It's not as detailed, right? You go to YouTube and search Capital Gains Tax Solutions, and you can start to just get that. Search my name on a podcast. I've been on Joe Fairless. I've been on Michael Blanc. I've been on Buck Joffrey, Kevin Bupp, all their shows, and then you can just start listening to it. Okay. But it's like anything, right? You can watch a YouTube video or you can hear a podcast, but until you have somebody guiding you who's been there before, taking you step by step, helping you avoid the pitfalls, holding you accountable, challenging you, pushing you, right? I love coaching and training and helping people. You're not going to make a lot of traction, right? And this is for
Right.
anything in life, right? Find a guide who's a few steps ahead of you, write a check, and go take massive action.
That's so what I promote all the time. I literally talk about it on a daily basis. If you're trying to do this on your own, if you're trying to do the YouTube University version, you're going to make so many more mistakes, which at the end of the day doesn't save you money. It costs you money. So one more time on that website.
Experttaxsecrets.com is the coaching site. Experttaxsecrets.com. And then you can go to capitalgainstaxsolutions.com to learn more about the deferred sales trust.
Perfect. And then what about other ways for people to connect with you? You've got the podcast. What about any social media?
All of it. Yeah. LinkedIn, Facebook, Facebook pages, YouTube, Spotify, iTunes, everything. Just search Capital Gains Tax Solutions or search my name, Brett Swarts, and you'll see it all pop up.
Awesome. Brett, anything you want to share with the audience that we didn't talk about, or any last words to helping the audience get on the next path?
Yeah, so you're in the business of, again, solving the problem for whatever challenge is in front of you, right? So what is the problem? Who are the people? And what are the potential solutions? The moment you start adding more value to whoever that other person on the other phone line on the phone is. So if you're trying to buy an Airbnb property, a rental property, and you can add more value than the last guy who called, guess what? You're in the next position to actually do the deal. But if you don't know as much about that property and the area and the location and the actual solutions to their problems, guess what? You're wasting their time. You're not adding any value. You
Right.
add value when you start knowing more about solutions and more about the properties and the rents in the area and all of those things. So just make sure you're a student of the game, right? And make sure that you're adding value. And if you do that, you're going to win.
Value, value, value all day long. Hey, Brett, you have added so much value to our audience today. Thank you for helping them to conquer the world of investing. Show notes for this one, fearlesskyle.com/Brett Swarts, and that's BRETTSWARTS. And you can find the link to his course and his information. We're going to have all of the links that he mentioned there. And I would just connect with him, get on his podcast, listen to what he has to share over there. And just the big thing is adding value. The more you know, the more value you can add to other people. And that's exactly what Brett gave you a little bit of a Reader's Digest version on today. So dive further in, learn more so you can add more value to buyers and sellers. That's where it's all at. Thank you again for joining us on the Fearless Investor Podcast today. We're helping you to conquer the world of investing. We'll see you next time.